Today's webinar is AI and the future of finance. So today we're going to explore the evolving and expanding role of finance. We're really on the vanguard of a major shift in the way finance and accounting practices work. It feels like we're at a tipping point. Today we'll talk about how technology, data, and talent are reshaping the function. So we're here to bring you ideas you can bring to your work and your companies, hopefully leave you with some practical steps to modernize your finance work. So before we dive in, a couple of just quick housekeeping items. Today's event is being recorded, so keep an eye out in your inbox over the next day or two for a link to go back and listen later. Please let us know what you have on your mind. You can use the comments section in Zoom today to put questions. We'll be talking about those at the end. We'll do a live Q&A. And when you're at it, please feel free to share the link to this event to your closest friends and colleagues. And as a thank you for joining today, we'll be sending out DoorDash gift cards for those who attend. So grateful for you for spending the next 45 minutes with us and talk about what's going on in AI in the accounting function. So to kick things off, I'll briefly say hello. So I'm Todd Brengle. I'm excited to serve as our moderator today. I'm part of our private equity and venture team here at Consero. We help PE partners with finance transformation in their portfolio companies. I've spent the last 15 years or so in software, including 2 AI-first SaaS companies. And now I will ask, it's okay, Ashley, I'll pass the baton to you to introduce yourself, please.
Sure. Thanks, Todd. I am Ashley Honeyman. I am the CFO and COO at Consero. But fun fact about me is that prior to Consero, I was actually a customer. So I first got linked in with Consero when I was introduced. My private equity company introduced me to them as an alternative to, hiring an entire team in-house and picking a tech stack and going through the implementation. And I had such a great experience. Consero helped me so much that now I am here continuing my journey.
Awesome. Thanks, Ashley. Kim?
All right, thank you. So I'm Kim Blasko. I'm Senior Director of CAS, Client Advisory Services, Professional Services at CPA.com. I thought I should add that since we're talking to businesses and maybe potential CFOs and controllers. I joined CPA.com in June of 2023. Prior to that, I had been in practice for about 40 years, and I left a top 20 firm that I led the CAS practice in when I moved over to CPA.com. So lots of experience. I had a small firm. I merged into a regional firm, and then when I left, they were a top 20 firm. So a lot of experience in different aspects of the outsourced accounting space.
Amazing. We're thrilled to have you both today. So maybe to kick things off, I'll briefly just introduce Consero, and then Kim, maybe I'll ask you to do the same on CPA.com for anyone who's not familiar. So Consero, we're an accounting services provider. We're dedicated to helping organizations and their financial sponsors lift companies up and really help them achieve better financial performance. So the company was born out of this observation that growth companies, especially ones that had recently been funded or taken on capital, they're forced to rapidly build and sometimes rebuild the finance team or the finance function. And it often felt like they fell behind. It took longer than they'd like. So we'd hear all the time, month-end close was a fire drill, messy data, reporting was a mess, and it was just super tough for both CEOs, CFOs, and their investors. And it turns out this was problematic for the companies, and their financial backers. So we asked the question, what if finance worked more like a product than a patchwork of hires and systems? And so we built a solution that gives organizations and their finance team the process, the technology, and the systems they need, and it was already put together. So today, Consero gives PE and venture-backed companies clean numbers, clear insight, and really serves as like an elastic finance function that they can scale up and scale down. So just to talk briefly about kind of what we deliver, what are our services, it really maps directly to the kind of questions we were getting from finance leaders. So first, we offer kind of a finance as a service, a managed turnkey solution dropping the team, the process, the tech as one package for kind of rapid finance transformation. The next is, we'd hear, I don't necessarily need a whole department. I just need the right people and the right seats, and I need them fast. So we built what's called Flex Finance. We'd plug in experienced talent, fill very specific gaps, controller, FP&A, operations, and we do it with speed and cost sensitivity that was hard to find. And then finally, we'd hear, we've got some big gaps, but they're more engagement based. We had an acquisition or a system change. We're preparing for an exit. I need a specialist who's seen this movie before. So our advisory services is kind of a bespoke, special situation help, complex projects, transactions, those one-offs. So with that backdrop on Consero, Kim, I might pass it to you and talk a little bit about CPA.com.
Yeah, thanks, Todd. So at CPA.com, our mission is really helping firms and finance teams embrace technology to transform their practices and position themselves for ongoing success today and in the future. We do that with three strategic drivers: drive the transformation of practice areas, deliver strategy and innovation-focused insights, tools, and resources, and then finally, advancing technology ecosystems.
I love it. So maybe with that backdrop on Consero and CPA.com, it would be great to kind of open it up about how the finance function is changing. So Kim, maybe you could tell us a little bit about evolution of finance and what we're seeing today.
Yeah, so the evolution of the finance function is really moving from that transactional control-based role to one that's really centered more around insight, influence, and impact. It also reflects how really technology is changing the mandate of finance, automating what used to be manual, freeing teams to focus on higher value strategic work. And in short, really, technology automation is really enabling that value creation. So whether you're looking at outsourcing your finance function or supporting this internally within your team, the finance evolution is very similar. We looked at focusing on financial accounting, like recording, controlling, and reporting. Technology is now automating much of that work, and we're really working off of from data entry to reconciliation being automated, giving finance teams back very valuable time. And as that focus shifts towards more of that management and decision support, that management accounting and decision support, turning information into insights is really important. And this is where the finance begins to interpret data, tell stories. I love the fact that what we do now as part of our role as storytellers, I think that's really important. And then also influencing that business strategy. And finally, we look at the end goal, right? Our end goal and most internal finance teams as well is all about that value creation. So, working with your business owners, that's where the finance collaborates across the organization to create that measurable impact, helping drive growth, innovation, and execution. So the message is really pretty simple. As automation handles the what and when, financial professionals can focus on the why, who, and how, becoming true strategic partners who shape outcome, not just report on them.
Yeah, I love that, Kim. Especially that whole idea of moving from the what and the when, so finance can focus on the why and the how as really a strategic partner. I think it's so true. So maybe to bring that down to the concept level of what our audience is dealing with on a day-to-day basis, let's talk a little bit about any of the trends we're seeing. I know CPA.com as well as Consero, we've done some surveys, we've talked to hundreds of finance practitioners to hear what are they seeing, what are they feeling. So let's get into a few of the trends if that's okay, Kim.
Yeah. So there's a lot of trends up here. We talk a lot about trends in our profession. I'm not going to go over each one of them, but I'm going to share a few of them so maybe everybody understands what's really happening in our profession. The first one I'm going to kind of talk about is the rise of the mega firms. So when I started practicing, we had something called the Big Eight, right? So 8 major, big, really large firms that were on a spectrum far above where anybody else kind of from the accounting profession was playing. Now we have the Big Four, which is really interesting, but we're in a major consolidation phase. So we have a lot of firms, very large firms that are consolidating, merging together, which are starting to look like we're going to maybe move off of our Big Four and become something else. Maybe we're going to have a Big Six, maybe we're going to go back to the Big Eight. The other thing that's really happening in this space is we have a lot of PE-backed consolidation happening, which is changing what that leaderboard looks like as well. So, between the consolidation piece of it and the PE backing, whether the consolidation is merger or PE backing, we're really seeing a very different space when it comes to that mega firm space. The other interesting thing about this is the mega firms are really winning on their breadth of services, their brand power, their deep advisory offerings, where the smaller firms are really surviving and even thriving by being more focused, boutique types of firms with some more cost efficiency. I will add, though, that the technology has made it easier for those very large firms to play down a little in that more of the medium client space because the technology has helped automate so much of that back office piece. I'm going to talk a little bit about evolving hiring and capacity models. So whether you're an internal finance team or you're an accounting firm that is looking to hire, that US hiring focus is looking a little bit different moving forward. So we're looking for talent on the US side to be relationship management and leadership, and technology driving more of the do more with less and the scalability mindset. We're constantly trying to upskill people so that we have talent that is our ultimate differentiator, across our practices. Training is becoming more formalized, more experiential, and more intense. The leverage will be leverage as a metric will be one of the ones that we will focus on moving forward, and really training our advisors to be more consultative in how they work with clients. And we think about, what are the drivers behind this? Like, why are we so focused on this? Talent shortages, which everybody is feeling, changing expectations of the younger generation, and technology automation for sure. Talent crunch is severe. Everybody's talking about it. Many firms are expanding offshore to find people to sit on their teams. It's been very compliance based in the past, but we're starting to look at that from a higher value work perspective as well. Some firms are looking at bringing in fractional people or seasonal talent to handle some of that peak hour stuff. And then some are targeting professionals outside of the CPA or the accounting track. So we're seeing more data analysts, technologists, consultants that are adding to diversifying the skills on teams. I mentioned offshoring a little bit. Offshoring continues to evolve. A lot of firms were thinking that, potentially offshoring might go away as we have more and more technology coming into the space, for sure, with AI and automation. But what really is probably happening more is that our offshoring teams are going to look a little bit different as well. I think in the past, we looked at offshoring as more of a cost arbitrage. We were moving compliance and transactional work over to those lower cost regions. Today, we're actually evolving into more of a strategic capability that includes that higher value task, not just that routine processing. And the last thing I'm going to mention is the globalization of client demands, because I think this is a really interesting space. Firms are growing, and as firms are growing, they're taking on larger clients, and those larger clients tend to have an international aspect to them. So we certainly are working on how to adopt global strategies and alliances. And the PE and the mega firm pressures certainly call for infrastructure scale as well. And then finally, I think we see a lot of cross-border expansion. I kind of mentioned that with the middle market piece of it, but we're also seeing international companies coming over to the US side that have no idea how to operate a business on the US side. So certainly needing help in spaces like payroll and HR and compliance issues. So they're really looking at someone to support everything from a back office perspective because they don't want to have anything to do with that. And then one final note on that, I think global supply chains create more complex tax, audit, and advisory needs, which is also helping with that globalization and client demand.
Yeah, that's great. Super fascinating. Just as you were talking about that, two quick points. So on the evolution of the big four, and it's almost as if like a lot of these large accounting firms are starting to vertically integrate, add different capabilities. The second one, just a quote came to mind as you were talking about kind of offshoring or taking different parts of the function and moving them external. It's like the old Bezos quote about focus on what makes your beer taste better and let someone else handle the rest. I think a
Yeah.
lot of companies are kind of moving that and thinking about how does that play in the accounting and finance world. Um,
Yeah, Can I add a comment to that? Because
Please, please.
I think that's really interesting. I think about where we were at. I'm just going to go pre-COVID, right? I'm not even going back that far, pre-COVID. And I think about where we were at in our accounting and finance functions, again, whether they were outsourced or whether they were internal, that those roles have changed dramatically since COVID happened, right? And I think, it used to be we were always trying to talk our clients into, this was when I was in practice too. We were always trying to talk our clients into higher value services like conversations, strategic advice, like all of that. And they were like, yeah, I don't need that. I just need the compliance stuff of it. Financial
Right.
statements were the product we delivered, right? And that's what our clients came to us for. Now that's changed. And I know Ashley's going to go into like the CFO space and stuff like that, but that really has changed dramatically as businesses got in trouble because of the COVID piece. And now they needed some of that, consulting piece, and business owners got used to having a consultant or somebody that really felt like their partner helping them work through the problem. So I think we've come a long ways since the whole pandemic piece of it, to the benefit, I think, both of our business owners and our people working in this space.
I love that. And I think that's a perfect segue. So, Ashley, to bring you into the conversation, I know we're hearing kind of finance leaders, they're being asked to do more with less. There's this evolution of, I'm sure just, in your years as a CFO, the role has evolved. So let's talk a little bit more about that. Um,
The, I mean, you couldn't be more right. I remember I used to tell people there's three type of CFOs. There's your chief accounting officer, which had that historical CPA background and maybe came from one of the big fours and was solely focused on record keeping and accounting. And then you had a chief funding officer, somebody who came in to raise funds for a company, or a chief finance officer that was more operational. And I really think the chief accounting officer is dead now. I mean, you can't come in and just do record keeping anymore. You have to have more to offer at this point. Um, and so it is really interesting because we're constantly being asked to do more with less, right? It's not okay to just give me the numbers and report on the numbers. I need to know the why. To Kim's point, like it's not just the what, it's the why, and even involving further into the how or the who to make things change. We're being asked to do that when it's also very hard to find skilled accounting and finance professionals in the US to bring in-house. I think somebody told me the other day that there's about 75% of CPAs are nearing retirement age, and there's not sufficient replacements coming in, which will only get worse as AI continues to evolve and the younger generation is hearing, right? Hearing AI will make accountants obsolete, which is not true because AI without context is useless, right? But when I think about this, constantly being asked, do more with less, do more with less, do more with less, well, you're losing the skilled professionals you need. There's really only two answers to that rock and hard place, and it is utilizing the AI tools to do a lot of that automated processing that you need to do. And we're seeing it today. I mean, I think AP especially is a lot more automated than it used to be. Think about 40 years, you used to actually take a bill from a mail and manually code it in. I mean, that's been obsolete for years. And AI is taking it to another step where you get something in email and it's in your GL without anyone touching it, right? It's a huge evolution. But embracing AI where it makes sense, and I know we'll talk about that a little bit later, but also because of the talent shortage, relying on those outsourced finance partners who are at a higher level, to your point, Kim. I think offshoring historically has been thought of do the manual labor, literally key in the bills, and that has evolved as well, where the outsourced providers are coming up with the strategic and operational excellence that they need to. So, in response to this, do more with less. I think these are the two biggest pieces we'll see going forward.
that sounds hard, Ashley. It sounds really hard. Um, Maybe we could talk a little bit about some of these challenges
Yeah.
that we're hearing and seeing.
Yeah, it is hard. And especially in December, everybody hug your CFO. It's budgeting season. And we're feeling the pressure right now because of so many of these challenges. And this comes from a survey we did with CFOs back in March 2025. It's our annual one. We'll do it again. But I think the first two on company-wide challenges are felt in the company and also in finance. The rising operational costs. I mean, costs are increasing, talent is increasing, it's harder to find. And retaining that talent is hard. Attracting and retaining the talent is significantly hard. And so with that in mind, now finance has to do more with less. So we talk about more with less, right? You still have to do the base accounting. Part of my role as CFO is chief accounting officer too. I have to do that. I have to pass my financial audits. I have to maintain regulatory compliance. When ASC 606 comes out and all of your rev rec changes, who's responsible for doing that? That is your CFO has to make sure that's in place. So we're being asked to do all those things and do more, but do it with outgrowing your current system, right? Do it with fragmented data and finance tech stacks. Like do it accurate in the face of those. So CFOs have to manage all of these things, keep your house in order, your base accounting, but also give me the insights, give me the why, and know the who and how to go fix it. So it's incredibly complicated, especially during budget season.
Yeah, and Ashley, I want to add on that too, because when we talk about the role that finance plays, right? A lot of times we talk about that whole people, process, and technology piece of it, right? You mentioned several of those, as you were talking through what those challenges are, and they definitely tie to that, and all of those are changing, and change is really hard. So you're talking about all the changes that come in, whether it's you're talking about regulatory changes. Well, that's process changes, right? So you're starting to look at, when you talk about 606, okay, well, that's now going to change our process and how we have to collect data so that we can actually report on what we need to report on. And that is really hard. And it is a lot of change. And a lot of times that falls on one person inside of a finance team, that gets tasked with some of that stuff. So I definitely, everything you mentioned definitely really resonates with me, just because I think a lot of times we don't think about the people, process, technology piece and how much actually falls under the role of the finance team.
Right,
Yeah,
for
happy
sure.
holidays,
Especially
right?
the one-time curveballs too, right? Like
Yeah,
you're trying to do everything and then you get thrown an acquisition. Or you're trying to do something and then a new regulation comes out, right? So
yeah. Or you
Yeah.
get a big, bold, beautiful act
yeah.
for a tax law change that affects everybody's life, right?
Yeah, exactly.
All right. So when you look at cost, talent, compliance together, um, which of these is creating the most day-to-day friction for the finance organization right now? I think, Ashley, this is for you.
Um, so it's I think it's all of them, but I think at the end of the day, it's the talent. I mean, you have it up here, right? Like it's the talent. It's hard to get anything done if you don't have the people to do it, right? And so when I look at this is again from our survey, company growth outpacing hiring. That's a really interesting one for me because I think the finance organization and CFOs are almost the last to pull the trigger on hiring because we own the budget, we own the costs. So a lot of times I think CFOs we're bad at hiring ahead of growth. So this is a nice way to say like the CFO didn't hire in time because it's like finally you're at that pressure point and you have to hire someone, but it takes 6 months, right? And so that is something everybody feels, and especially in this market where people aren't coming out and getting accounting degrees. There's a ton of people retiring, and I really do think, if I was going to college today, knowing what AI is, hearing in the market, I mean, how many times have you heard AI will replace accountants in 10 years or 20 years, right? I don't think that is true. I think the role of accountant changes. But I think having the background in accounting is incredibly important for that. You just have to know how to use the technology as well. But it is driving it's really hard to hire right now. And if you don't have the people, you can't handle the curveballs.
And you look at the time to fill data. I mean, this is supposed to be an employer's market, right? For talent, and still 4 to 6 months, to fill roles. That's just mind-boggling to me.
Mhm.
So,
Mhm.
Kim, anything else you want to add to this?
I was just thinking that when Ashley was talking about, not hiring fast enough, right? Not actually looking at the growth and saying, I need to hire somebody today because I know we're going to be in trouble tomorrow. I was thinking CFOs are their own worst enemy when it comes to hiring because they do understand what that cost is going to do to the bottom line. Yet the importance of having the right people on the team is by far one of the most important things that we have inside a finance team. So certainly that aspect of it, I think, is very relevant.
Yeah.
All right, Ashley, I think this is you as well, so I'll let you take this one.
Yeah, absolutely. And I mean, this comes as no surprise to me that 96% of finance leaders work with outsourced accounting partners. I mean, finance is very comfortable using third-party providers. And a lot of times it's one time. Like I look at these and, financial due diligence is going to be one time, a general ledger cleanup is going to be one time, restatements, even sometimes the FP&A reporting and budgeting might be a one-time project. And then some of these are recurring, right? 47% using outsourced bookkeeping, and that's a direct result of both cost and hiring when you have an in-source team, right? It's hard to hire, but it's also a cost you carry, where when you do use an outsourced provider, a lot of times you can flex up, flex down as needed. So it gives you another lever in that budget to pull if it's going up or if it's going down, right? Like if you're growing a ton and you can't hire, but you have an outsourced provider, a lot of times they can ramp you real quick as opposed to your 4 to 6 months that we just saw.
Yeah. Kim, anything else you want to weigh in here or?
Yeah, I think Ashley had some great comments. And, I'm going to reference back to the slide you covered, Todd, in reference to the different options that you guys have in your service model. And I think it's really insightful to think through the fact that project-based services are a wonderful thing to have an outsourced capability on just because you can solve a problem fairly quickly and it is hard to bench project-based work, right? So I think that is a great option to have for any business that needs to, have something coming up that they don't have internal resources on. But I also love the fact that you have a full service model, which includes everything from the back office piece to advisory and the strategic side of it, because I think it's really and it's a really important option for a lot of businesses. And we see more and more looking at potentially not having any sort of finance function and really outsourcing all of that because it is more cost effective for a lot of people to do that. They do get, a very high quality of service and people that are sitting on the bench to do that. And the quality of the work coming out and the timeliness of the work coming out seems to be much more structured in an outsourced environment. It's like we can't wait till tomorrow because we have other things to do tomorrow. So we have to make sure we get this done today and we get it to our clients so that they have what they need to make the proper strategic business decisions.
Yeah, the timeliness is the one I hear about all the time.
Yeah.
It's yes, we could do it on our own, but the time to value, it's a trade-off of like, how
Yeah.
long am I willing to wait? What is acceptable? So I think quality and timeliness are super important there.
Yeah.
I think we've got a few more. Ashley, I think I'll let you talk a little bit about, of course, we hear all about AI and just where it's sitting today within
Yeah.
finance.
This is the fun side. This is why everybody's here, right? And your finance, this is why we're here. But, I think what we've heard to this point is finance continues has to do more with less, right? One of my car places, I was at the car place and it was like, you can have it better, faster, cheaper, pick two. You can only have two. But in the finance function, I think we're constantly asked to do all three. Like have better financials, more quality financials, do it faster, and don't spend any more money, right? Exactly. So better, faster, cheaper. So when you think about how you're going to do that, I think AI does allow us to do that. And it actually surprised me on this that 62% of people think their spend will increase within the next year because that meant 38% didn't. But then I remember this survey was in March last year. I think when we do it in March this year, this number will only increase because you have to do it if you want to be able to do a faster close, if you want to be able to stop spending time analyzing the data and start spending time with the why and the know-how and making the changes in your organization, you have to let AI do the work in addition to the offshoring, right? Because those are the only ways you're going to do it at the same price, if not cheaper. And so, when I think about Consero, Consero is doing this because we talk about AI as an efficiency play. AI is a quality play as well. I mean, so many of the tasks in accounting are manual, and the best accountants make mistakes. You can invert two numbers so easily, and so those are errors. One thing we've done at Consero, which has been absolute game changer for us, is around our AP automation. So we use Bill.com. Bill.com has an OCR technology, right? It can read the invoice and it can populate the data. But then a human has to go in and code. What department am I putting that in? What GL am I putting that in? But it's pretty standard. We've done it before. So Consero created the AP agent to be able to go through that, the quality score. Some go straight through, others get reviewed for quality. And so our AP, like, we talk about efficiency a lot, but the quality has improved massively. And I think we're like at this point 99.8% accurate in our AP tower, largely because of that solution. We've also done Cash App agents, right? So that instead of having to wait for someone to look at the cash that's come in and match it to the transaction, our Cash App does that automatically. So you can get your cash balance a lot more real time. That's huge, especially for small companies, startup companies that are managing that cash balance week to week. You're driving your 13-week cash forecast. You're looking at it. Can I make payroll this week? It's tight. Who do I have to push? You need your cash balance to be accurate immediately. And so that's one place that Consero is doing it on the back end. And I think everybody should be looking at that, looking at using an AI agent to help you with your work, an AI tool. And the tools already are doing that. If you think about Intact's new release has a ton of AI features. That anomaly detection is an easy one, kind of a co-pilot that can sit with you. You can ask questions to. So I think the existing players are getting there. But then the other thing we're seeing is the, AI native GLs, right? So again, one thing we're doing at Consero is we created our AI Fusion Lab, where we're taking Rillet and we're using Rillet to perform the finance function for our users because it just makes so much sense to have that AI-enabled system right there. It makes revenue easier, invoicing easier. It reduces manual errors and improves quality. The reporting is fantastic. You can go natural language questions. So I do think in the future, people in the finance function need to embrace this. And, we talk about accountants and how the accounting industry, it's going down. People are leaving that industry. And so you need to rely more on your outsourced providers. But I don't think AI is going to replace accountants. I think lives next to accountants. One thing, I don't know if you guys have played around with AI, but AI without context is completely useless, right? AI needs to understand the business. It needs someone running with it to understand the business, understand the context, to be able to say, okay, here's what I'm seeing in accounting. Here's what my business is, not just the accounting standards, because the accounting standards, AI can go and read those and know them, but here's what my business looks like. And that's how the accounting standards are matched to my business. So based on this context, build me an AP solution, build me a forecasting tool. So I think in the future, accountants just look different, where they're understand the accounting policy, but they're really savvy in business and savvy in understanding what's unique for that company, and then savvy in the tools to be able to use them to help the function moving forward. So that's where I see AI going, but I do think every company should be embracing it or looking at it. There's a lot of tools out there. The market right now for AI tools in the finance function is huge and growing. And a lot of them are great and a lot of them need some work. So that evaluation is important.
Yeah, it does seem like it's getting better. I was with Kim in DC, it was just last week, and got a chance to see a bunch of these new tools. And it is pretty amazing, the pace of innovation and what some of these companies are putting out. Certainly, Silicon Valley is very bullish on the AI in the world of accounting space, a ton of, funding coming in this area. So certainly it's an exciting time. All right. So Kim, bringing you back in, we had this CPA.com state of accounting research. Tell us a little bit more about this.
Yeah, a perfect lead in from what Ashley was talking about too. So in March, we had our second annual AI and accounting and finance symposium. There were more than 70 accounting finance leaders, technology solution providers, AI experts, and regulators there. We really examined the AI landscape and discussed strategies for the profession to seize and shape the significant opportunities that this technology offers. And there were five major takeaways, and I'm going to read through those in a sec. But if anybody is interested in seeing the whole report, you can go to cpa.com/AI, and the report's in there. It's called 2025 CPA.com State of AI in Accounting Research Report. The five takeaways kind of align with what Ashley was talking about. So bookkeeping and automation is already AI driven, but will become fully automated with agentic AI. I think that's a given. I talk about AI a lot, and I always say AI is not really new, but we talk about it completely differently than we have in the past, right? So AI has been embedded in a lot of the technology that you already use. We've just never talked about it like AI, but it definitely is in the forefront of every conversation that we have now. Tax preparation and compliance is evolving rapidly, moving toward near total automation for prep and significant AI augmentation in review. The audit and risk analysis is cautiously adopting AI with compliance and liability concerns slowing full automation, which that is not a surprise to any of us that don't work in that space. Advisory services is currently less AI driven, but as compliance work gets automated, AI powered insights will definitely fuel growth there. And that Ashley was talking about as well, how AI is going to help bring more of that strategic piece. And then workflow and efficiency AI, which includes email automation, process optimization, and AI assistance, is already advanced and well becoming even more present in firms. I think most everybody is using AI for some email, function right now, but we have a lot of firms that are still kind of scared about, AI and what that means to them as a firm, and certainly from a security and a privacy perspective. So I think, we'll continue to see this, different things come out into the market to help people feel a little bit more comfortable about where it's at in the different services that we're offering inside of accounting practices. And I think, just to keep people informed more on how AI is going to start changing the way that we work.
Fascinating. It seems like efficiency is the word of the week. Ashley, tell us a bit more about that.
Sure. So, I think it's hard to be a finance professional and not hear about month-end close, get your month-end close faster, reduce your month-end close. And when we think about month-end close and how to improve it, I think AI helps significantly here. Anything you can do with close, anything you can do with automation is going to help reduce this. Like one of my favorite features of Rillet is you can say, what should my accrual be this month? And it goes through your expenses and comes up with the accrual, where historically, you have to comb through and look through your vendor expenses, look through your costs. What cost am I missing? Let me accrue for it, right? So, I mean, there's a lot of ways that it will help reduce the close. And we're constantly getting pressure again, like better, faster, cheaper, do more with less. Like people want this quickly. I think the dirty little secret about month-end close is that to get to a, under 3-day monthly close, I'm a 2-day close, you have to be comfortable with a certain level of accruals because you don't get all your vendor invoices by like the last of the month. You don't, especially like if you're a professional services company and you're doing hourly based billing, you can't get hours in the system reviewed and approved in time to bill out those hours. So if finance and we actually did a whole webinar on this, if finance leaders really want to get the close down, you have to be comfortable with a level of accrual. I went from a 10-day close to a 3-day close at Rafter One because IPG mandated a 3-day close when they acquired us. And we got there by doing an estimate on revenue because we're a professional services hourly based company. We have to do an estimate on revenue. So I think AI helps you get there, but you also, it's a mindset shift, being comfortable with a certain level of accruals as well.
Yeah, it's great. Well, look, we covered a lot of ground today. We talked about a number of things, some trends, risks, a lot here. Actually, maybe help us summarize a couple of the key takeaway for our audience today.
Oh yeah, absolutely. So, Kim talked about this first one right out of the gateway, right? And we're shifting from historically being record keepers, just saying, this is what last month looked like on BD10, right? Like your chief accounting officer to being really a strategic partner and going from just the what to the why and to the who, and the how do we make changes. So, I think the CFO role has shifted significantly. I know I work hand in hand with our CEO all the time, just from operations perspective, not even to do with finance. Uh, but that's the big one. But as you do that, as you're taking on all of this strategic work and this operational work, you need to do it without growing your finance team, right? Like keep your finance team less or even more. Now with AI, it's, oh, can you reduce your finance team, right? Can you reduce costs there? And so that's something finance leaders will always feel the pressure on. And not only just from, their private equity sponsor, their CEO, from themselves, right? When I run the budget, I see how those costs are impacted. So again, as Kim said, we're our own worst enemies. We don't want to be seen growing the finance function. If your revenue is growing 10%, I want my finance function to be flat, right? Um, and then the last one, the title of this webinar is AI and the future of finance. That's because AI is the future of finance. Like this is one where people will have to take advantage of that in order to do more with less, right? In order to improve the quality.
Yeah, really well said. I think we've got, let's see, 2 minutes, so we might only have time for one or two questions. It looks like we did have a number come through while we were talking. This could really be for either of you. Um, let's see. Can you talk about how the CFO's role will evolve and any shifts? Maybe Ashley, this is for you. Shifts in the skills finance leaders will need to stay at the top of their game. So, like,
Yeah.
what are the best of breed CFOs? What are the skills that companies are indexing on now?
For sure. I like Kim actually talked about relationships at the beginning. I think, CFOs are the counterpart to the CEO. So they need to be more strategic and operational. So it's not okay to just know accounting. It's not just okay to know budgeting. You need to know your whole business. You need to have a handle on that. You need to know the operations. You need to really understand to be able to act as that strategic business partner to your CEO. And it's about relationships too. I mean, CFOs aren't hiding in the back office. They're front and center with investors. They're front and center in the boardroom. They're front and center with the exec team. A lot of times they're front and center with clients. I mean, I'm on a client call every week, right? But yeah, I don't know. Kim, anything to add there?
No, I mean, I think you hit on it. I do really think it's important. When we talk about C-suite, CFOs weren't typically included in the C-suite in the past. And I think now they are 100% in the C-suite. And you're right, they have to understand the entire operations and what's happening in the business, not just the finance part of it, because they are an integral part in that strategy for the individual businesses that they're working in.
So hug your CFO is what I keep
Yeah,
thinking
that was
about.
great when Ashley said that. Hug your
Yeah.
CEO. You could do it all year long. You don't have to do it just at year end when it's budget time because that's painful. Closing books and budget all at one time is a painful process.
Yep.
Maybe one last one to bring us home, and it's one that I think is on most people's mind right now. So with all the talk about technology, I think a lot of people are a little apprehensive. They could be scared. Um, how do you kind of strike the right balance of leaning into the future while also recognizing the change management that this is going to require? And what are my employees going to be doing? And what's it going to mean for headcount and hiring or lack thereof? So for either of you, I'm just curious if you have any thoughts on that.
Well, maybe I'll jump in, Ashley, and then you can add to it. So I think change is hard, right? I think I mentioned it in the beginning. Change is hard. And one of the most important things when you think about all the changes that are happening in the finance function today and how automation is, helping with some of those lower level tasks, and you had people that human people that were doing that before, right? And now we're looking at automating that piece, and they are asking, what does that mean to me, and how am I going to play a role in this? And to be fair, some people are upskillable, if that's a word, and some people are not, right? So you have to think about the team that you have today, where AI and automation are going to play a role with that team, and then how do you change the role that your people are going to play in the future? And some of that might be we just don't have a role for you anymore, which makes people uncomfortable, but it is really what is happening. Or you have the people that are like, well, I was only doing this because this is the job I had, but I'm so much more capable. So scale me up, like take me to that next level, and let's, see what that looks like and how can we help. But I think transparency is really, really important when you're doing change. Training, really, really important when you're doing change inside of your finance teams, or even in your practices. So really important to think about how are you going to keep people aware of what's going on, and then how are you going to train them once you start working on different technologies.
Yeah.
Yeah.
And in terms of like just kind of tactical in the office of the CFO, I think for me, what we're doing in internal finance, but then also in our operation and our client services team is what's the most manual thing you're doing? What's the thing that's taking time that is just zero value add, right? And that's how we should always think about it. Like, where do I spend time in my day that really isn't worth it, but I have to do it, right? And so that's why kind of at Consero, we started with that AP bill coding. It's so manual, but also anything manual is prone to error. So that's why we tackled that one. In internal finance right now, one of the things that's really manual for us is our budget. It's still in Excel. So we're migrating to an FP&A tool. That's arguably not AI. Arguably it is. It's what is AI? Like half the time, that's not agentic AI, but it is a tool that we're moving to. So I think it's about looking at what your team does and what's really manual, what's painful, and then go see if there's a tool that can solve it. And it might be, it might be one of your legacy tools, it might be an AI agent, it might not be. So I think that's one, is to look at your manual processes. And then we're a bigger company and all we do is finance and accounting, so we're able to do this, but we're asking our client services team to do the same thing. And then we have a couple AI experts. And so put the SME with an AI expert. Like that's where the magic is made, right? Because the AI expert who knows those LLMs and knows some of those things, they might be able to pull up an agent for you pretty quick. But if they don't understand the context and what you need, they can't do it. So one magic moment I saw was kind of our head of onboarding teams up with an AI person on our side. Contracts audits. Contracts audits are manual. Go through every single contract, every single invoice, what's right, what's wrong, set it up. Can we have an agent that does that? So that's something we're working on now, because all AI does is improve quality, and it makes it better, faster, cheaper.
Amazing. Well, I think that's all the time we have for today. Kim, Ashley, thank you both so much. For everyone who hung out a few minutes over, I really appreciate you tuning in, and hope everyone has a happy holiday. Thanks all.